Investors seem to be forgetting the basic rule: don't fight the Fed. And I quote, "The disconnect between Wall Street and the Fed will result in more market volatility." I think that at some point the markets will realize we can't get that 2%. And then the markets probably do sell off on that. Maybe in the short term, stocks and crypto go up. And then the second quarter, they're going to go back down as the people begin to realize that we're not going to hit that 2%. It's just not realistic. This according to Chief Strategist at Spouting Rock Asset Management. So I want to jump in and read a little more of what I just cited here. So what inflation data means to investors, and basically why are they concerned about inflation data? I know I've done a few videos on that, and I think it's something that's important we try to gain understanding in, because that just means inflation is basically when the prices and labor all are rising, energy prices, etc. Okay, I'm just going to read this and then can break it down a little bit. Before every consumer price index inflation report comes out, and that's the consumer, it's called the CPI, the Consumer Price Index on inflation, okay? Before it comes out, there's always intense speculation. Is inflation falling or rising? Will the market rally or will it collapse? Every bit of data is analyzed to determine what the Fed or the Federal Reserve will do next. Will it raise interest rates? Will it start to lower interest rates? Will it ease off? Or will it continue to tighten? Even though the Fed clearly states their position, there is what the markets want and what the Fed wants. Somewhat in between lies the best course of action to protect the value of your retirement funds. I don't know if I necessarily agree with that. I think we cannot stay with the traditional ways of investing. The percentages of portfolios have changed over the last 2 years, changed everything. And what's coming with new trade blocks, what's coming with the digital dollar and the digital currencies, with the BRICS nations and so forth, energy issues, even if the war was to lighten up between Ukraine and Russia, we're still going to have energy issues because we're changing from oil-based into these alternative energies, and we have no infrastructure to do that. So that means we're going to have a shortage. We already have a shortage in electricity as it is in our grids, right? So how are we going to move into energy when we're already seeing now prices being pushed, and we're not even at the point yet where we're being forced to have electric vehicles and things of that nature. So energy is not going to ease at all, in my humble opinion. Let's continue to read here. Economic data so far has been very unclear, pretty much going on almost, well, a year now, right? Overall inflation appears to be dropping according to the CPI, the latest CPI, but core inflation, now this is important, core inflation, the rate when volatile fuel and food have been removed, is increasing, okay? So when we take that volatile fuel and the foods, we talked about in another video, the foods we actually consume, not what's been put in this CPI basket over the last 20 years. I'm talking going back even before when we really measured inflation. Volatile fuels and foods, staple foods, foods that we normally consume, are not considered in that basket anymore. So we're not getting a true reflection on inflation. That's another video, and I want to go into that today. So wage growth seems to be easing, they say, which should reduce inflation. But there are so many openings out there for jobs that you're still going to have a high demand for workers, which means that fewer workers means higher salaries, which means higher inflation, higher prices, right? We talked about that in another video. So unemployment seems to be easing according to the study, which means inflation should remain steady, well, according to these reports by the Fed. But according to what we're actually really seeing on the ground, that's not true. You're seeing some of these mega giants that just brought in all these people to fit these woke agendas and so forth, releasing now a lot of people because they just cannot, like Amazon, for example, just cannot continue to sustain this amount of people when there's not that kind of free money in the economy. It's becoming more expensive. We're having less available money to be able to buy things with, so we're getting back to our basics, so to speak. So Amazon needs to reduce that down, but they have so many workers that what they're laying off, 18,000 there, 18,000 there, on a macro scale, they're laying off very few. So you're still going to have a need for jobs, and you're going to have a need for people now. Now all of a sudden, you're not going to be able to go out and just fill your jobs with equality. You're going to have to go out and find quality, and that quality now is going to come at a higher price. Continue to read. Based on trade data, Wall Street expects inflation to fall faster than economists and the Fed officials do. The Fed Fund futures market. So the Fed Fund futures market bets on inflation rate. It sees inflation coming down to 2.5% over the next 7 months. Stay with me here. But the Federal Reserve projections say inflation will remain above 3% until 2024. Fed officials have clearly signaled that interest rates must be raised above 5% to hit that 2% inflation target that we talked about. But now actually they're realizing they're not going to hit that 2%, as we mentioned earlier. And so therefore they're going to have to push that inflation to about 5%, 3 to 5% of what we stabilize at. So we need to get used to a higher cost of living, which we talked in another video. Investors seem to be forgetting the basic rule: we don't fight the Fed, right? And that disconnect between Wall Street and the Fed is going to cause these volatile markets like we're starting to see now. We're starting to see down, and when it bounced up all of a sudden, what caused that? You know, not all free market out there, not all free money. In crypto, you can kind of measure and see who's buying in, if it's retail investors like you and I buying in, or if it's big whales or big banks. And that's what it looks like is happening, is the whales and big banks, the whales being the millionaires and people that are heavy and can invest, right? What they call credit investors, right? BlackRock is the world's largest asset manager. They have 10 trillion assets under management. They warn that investors are underestimating the threat of stubborn high inflation and elevated interest rates. They see inflation running hot well into 2023 and then beyond. The firm sees little chance of the Federal Reserve cutting rates, even if the economy slides into a recession. Get this, quote, even with the recession coming, we think we are going to be living with inflation, they wrote. Quote, we do see inflation cooling as spending patterns normalize and energy prices relent, but we see it persisting above policy targets in the coming years, unquote. Again, we are not taking into consideration here in these reports the actual CPI, the actual consumption of energy, this renewable energy. We're getting away from oil-based energies, and even our reserves in the United States are at basically all-time lows. So with our fuel. So what's being subsidized now to keep fuel prices low is not the true reflection of what fuel prices are. And what's to say about this administration then going and sending over more fuel to support Ukraine in the war, et cetera, et cetera. The fact that weapons and the spending that we're doing, this $1 trillion omnibus bill or a multi-trillion dollar bill that just got passed, where's that going to come from? That's coming from us. That's going to cause inflation. If the government can raise prices and they get a set percentage on taxation, and the wages go up and they get a set percentage on your earnings, that's more money filtered to the government. So do not think that that's going to go back down anytime soon. As the will they, won't they debate plays out, interest rate hikes, the market continues to struggle. All three major indexes, note this, fell this past year. The Dow Jones Industrial Average ended the year at almost just under 9%, 8.8%, the best of the three. The S&P 500 sank 19.4%, while the tech-heavy NASDAQ composite plunged 33.1%. And then you had Bitcoin coming in and plunging over 50%. But there's some nefarious things going on there too in crypto right now because it's a threat to the new digital dollar rolling out. So what we're trying to say here is that we need to adjust our life and our life patterns for higher inflation. Now, does that mean, well, that's doomsday, I can't make it? You're going to see a lot of homes actually begin to go in foreclosure. You're going to see a lot of homes on the market. We're already seeing that now. A huge increase. Just in our area alone, the value of homes has dropped to 25%. On our house here, we've lost $100,000 in value right now. The other thing you're going to see is that the unemployment, or actually the need for jobs, quality jobs we mentioned earlier, is going to be, for quality employees, is going to be higher. So what's the benefit of that? Well, you get higher wages, but then if you get higher wages, then also you got inflation. So what does this mean? Well, this is chaos. And the great thing about chaos, and not that I'm a 100% supporter of Jordan Peterson, but I think he's got some really good points. And one thing he talks about in chaos is that, in his book, The 12 Rules for Life, is that in chaos are opportunities, many opportunities. So if you're one who's willing to push yourself forward and take opportunities, especially with AI out there, with all this artificial intelligence and these bots we can get into and things we can do, there are opportunities, and there will be opportunities. It just might mean you have a career change, and you just have to accept that fact. These young kids that I mentor, I've talked to them, you're in college now, but by the time you graduate college in 2, 3, 4 years, most of you will not use your degree. And most people today who graduate college, by the time they get out of college, they don't use a degree in their life. Maybe some parts that they study, but you're going to need to be able to move in these opportunities. There's a lot of opportunities coming. The metaverse coming, good and bad, but to have a lot of opportunities for employment and work. A lot of opportunities to be an entrepreneur and take responsibility in charge of your own life. And that's what we're going to help you do here at DeFi LT. So subscribe, please stay with us, give us a thumbs up. If you like these kind of videos, we're trying to get that 30,000 is our goal this year. It's a long ways to go. We got 27,800 to go more, a little less than that. But help us out, and we want to do this full time and try to help you get through what's coming. Talk to you in the next video.